Good morning, everyone. Welcome to the TradeStation Masterclass. My name is Jesus Nava. I'm the Director of Client Training and Education for TradeStation Securities, and it's always a pleasure to be here talking a little bit about TradeStation, its technology, and its capabilities when it comes to customizing indicators, customizing workspaces. So let's use this opportunity to get to know each other. You have access to the chat, so make sure that if you have any questions or things are not yet clear, you let me know right there in the chat. I'm glancing at it, once in a while, just to make sure that I address all the questions that we have here. Let's go ahead and talk about the topic of today's presentation. We are going to do a little bit of programming. Easy Language is TradeStation's proprietary programming language, and it allows you to do many, many things, not only to the indicators and strategies that come supplied with TradeStation, but also, create things of your own, things that you probably are thinking about, trading methodologies that you want to put to a test, whatever it is that you're trying to do on your TradeStation platform. Easy Language is going to, take that one step further. So today's topic is transform your indicator into a strategy to measure performance. Let's go ahead and get started. Before we do so, let's go ahead and go through some of the disclosures. Keep in mind that every symbol and idea that I talk about is for educational purposes only, that these are not recommendations of TradeStation, and that active trading is not suitable for everyone. If anybody here needs additional information on these disclosures, go to www.tradestation.com/important-information. We are going to talk about strategy performance, look at historical backtest. So a lot of times when we show numbers, we have to be aware that what we see in a historical backtest is no guarantee of what's going to happen going forward. So let's go ahead and switch over to my TradeStation platform and set the stage for what we are going to talk about. Supplied with the TradeStation platform, of course, we have hundreds of different studies, and I would say dozens of different strategies. A lot of the strategies that are supplied with the platform are based on the studies or the indicators that are there. So, for example, if you're using moving averages, then there's a moving average strategy that you can backtest. If you're using Bollinger bands, then there's a Bollinger band strategy that you can apply and backtest right out of the box. But today's class is all about taking those indicators and maybe making modifications, or maybe creating things out of scratch. Let me go ahead and post the link again to some of the materials that we're going to be using in class. We are going to write those indicators that I shared with everyone here in class, so you can get a feeling of what is it that you need to do in order to turn an indicator into a strategy. We can look at an example once we finish with the custom code that I've shared with you guys today. And then we can do something simple like taking one of the supplied indicators with the TradeStation platform and turn it into a strategy. So let's go ahead and go to the studies menu and go to add study. One of the ideas that I had for everyone here today is a spin on, or a different interpretation, not interpretation because we're still using the raw calculation, but it's a different way of using Bollinger bands. And the strategy or the indicator name that I supplied to everyone here is @MC. Most of the indicators and strategies that we supply here in class start with the prefix @MC. And we do that for one specific reason, so that when you go to a list of indicators and strategies, it's easier for you to find them because they're grouped together. So the prefix @MC just stands for masterclass, and the indicator that I'm going to use here or introduce to you is Bollinger dual bands. But before we look at it, let's go ahead and take a look at the regular one that comes supplied with TradeStation, which is just a regular Bollinger band. Give me just a moment while I locate it. Here it is. Okay, everybody is aware or knows the existence of this indicator created by Mr. Bollinger. All right, so this is the normal Bollinger band that comes right out of the box. If you're not familiar with this, it's a very simple, straight calculation. That middle line that you see right there in the middle, the gray line is just a simple moving average. And from that simple moving average, what the Bollinger Band does, it calculates standard deviations above and below. And the standard deviations are just an indication that, I mean, it's an indication how far the prices are moving away from that middle line, which is the average. It's a very interesting indicator that measures sensitivity of price movements. Of course, when you see a bulge like this, like over here, this happened recently, August 2nd and August 3rd, where the market had a huge drop. By the way, this is Amazon. You see the Bollinger Bands separated or separating significantly to account for that volatility. And when the Bollinger Bands start getting closer to each other, then we consider that more of a consolidation period, more like a squeeze. So one of the things that I did, and one of the things that I started thinking about was, different levels of standard deviations. The default one for the Bollinger Bands is 2 standard deviations above and 2 standard deviations below, which pretty much means that most of the prices are going to be within those 2 bands. They're going to be contained inside the Bollinger Band. 5% of the prices are going to be outside. That's when the prices reach that extreme. So in addition to using, those 2 standard deviations, which is the majority of prices, the idea that I wanted to do for this indicator is to make it allow you to have 2 lines at different standard deviations. I know you can go in here into the inputs of this indicator and make it any standard deviation you can or you want. And you can do that by double clicking on the lines. And in the inputs is right here in the middle. You can specify the number of standard deviations above and below that midline. But what if you wanted to set multiple lines and have them all visible at the same time at different standard deviations? That's what I did on this indicator. It's nothing fancy, but as a trader, or as a as a strategy tester, I always like to test different ideas. And the concept here was to use different standard deviations as ways of triggering entries and exits. I'll talk to you through it and some of the ideas that we came up with. So let me go ahead and remove this indicator because this is the one that comes applied with TradeStation. And I'm going to be using the one that I just shared with everyone here, which I called @MC Bollinger Dual Bands. Here it is. And I'll click OK. And this is what it looks like. All right. You can see that it doesn't look very much different than the default one. It just has this additional dotted line in between the bands that accounts for 1 standard deviation. So you're seeing both bands, the 1 standard deviation and the 2 standard deviation above and below the midline. The standard Bollinger Band strategy, Troy, by the way, you're going to find it right here in Studies and Add Strategy. It is built into TradeStation, so you don't need a zip folder for that. The one that I modified is available in the zip folder that I just shared with you, and I'll share it one more time in case someone missed it. It's right here in the chat. Okay, so this is my idea. What I wanted to do, in fact, let's go ahead and look at the code here. This is an easy language class. So let's go ahead and walk you through the code and show you the things that I did to it. Because one of the things that I do a lot of times is copy and paste. Just remind yourself that you don't have to create code from scratch all the time. Although many of you have created your own custom indicators from scratch, I know many of you just want to take the simple route, which that's me right here, and take whatever is already written and then use some of those components and modify, and then grab something from one indicator and combine it with other components and create something different. So what we did here is we're still looking at the Bollinger Band price. And some of the things that I added here were right here, number of deviations up to, because there was already an input for number of standard deviations up, which is set to 2. This is the one that I showed you in the front end where you can modify how many standard deviations you want to use in those two bands. But we needed a way to supply a second number. So I had to specify a second set of inputs that allowed me to enter a different number for standard deviation. So we have the numDevs up, which is a 2, and then we have the numDevs up 2, which is the 1. So that controls the standard deviations on the upper side, and the negative numbers are the ones that draw the standard deviation on the bottom side. Everything else, remained pretty much the same. This is some of the colors here I actually ignored. So if I wanted to clean up this code a little bit more, I could, because many of those things I'm not using. If you looked at my indicator, let me go back in here, I opted for the blue and the red. But if you go back to the code, there's some code here, for example, my colors, and there's a dark orange. Maybe this is the dark orange. Maybe I am using the colors that are here. Interesting. So, but a lot of the things that you find inside the code are things that customize the look and feel of the indicator, and those are things that you can definitely modify. Let's go and go down a little bit more here, because I wanted to show you where the plots are. So you can see that there is an average calculation that's on line 40. This is the calculation that draws that middle line, which is the simple moving average. And all that it grabs is the Bollinger Band price, or it says the input name here is Bollinger price. But if you look at the very top, Bollinger price is defaulted to close. So even though it says Bollinger price, we know that it's just grabbing the closing price of every candle. So the calculation is pretty straightforward, where we have the average of the closing price over a period of time. The length by default in a Bollinger Band is 20. And then from that, we calculate standard deviations over that same length to draw the upper band and the lower band. Notice that this is using numDevs up, numDevs down, which we saw and in the inputs declaration. Sorry about that. And then we have, this is the modification that I did. I said, well, let me create an upper band 2 and a lower band 2 so that I could have these dual bands around the simple moving average. So when you have those two calculations, which are very similar, then it comes to the plotting. And we're plotting a total of 5 different lines. We have plot 1, which is the upper band, plot 2, which is the lower band. This is the middle line, the average. And then these are the 2 ones that I added, plot 5 and plot 6. Anytime you need an additional plot, you can continue adding plot statements and plot any calculated value that you want. I do a class that is titled How to Add Different Plots to an Indicator, and I go through the steps of doing it. Today is about creating a strategy based on this idea. So I'm going to use a custom indicator that I'm sharing with everyone here, which is based off the built-in Bollinger Bands of TradeStation. So there's nothing fancy here, nothing unique, nothing proprietary. So it's just a different way of looking at Bollinger Bands. So this is what we're going to do. And you have the strategy already in place. But let's go ahead and write the strategy together so that we have a better understanding on the mechanics of doing it ourselves if you want to take any indicator and turn it into a strategy. One thing that you have to keep in mind is that indicators and strategies are both kind of different types of easy language documents. So you do have to be careful as to what type of document you are creating. And we'll go through the steps and it'll make more sense once you see it. But I am going to select all the code that is in here, and we'll go ahead and clean it up a little bit and remove some of the things we don't need. But the basis of turning an indicator into a strategy, or the very first step, is to grab the code that already exists inside the indicator and move it into a strategy. And then we're going to tweak it and change it so that we can do that transformation into a strategy. So I'm going to do Control A. That highlights all the code. Control A is just select all. And if you're using, well, you can't be using a Mac because of it, but I think it's Command A If you're using a Mac, it's just one of those Windows commands that selects all the text. I'm going to do Control A to select all, and then Control C to copy. Shortcuts, those are Windows shortcuts. And I'm going to go to the File menu, go to New, and notice that these are the different types of easy language documents that you can create. And right now, we're going to select strategy. Notice that indicators separate. That's what the Bollinger Band or the Bollinger Dual Band is at the moment. But we're going to go here and create a strategy. And we're going to call this at MC Bollinger Dual Bands Scale Out. I'm going to call this number 2 because I already have a strategy with the same name, which is the one that I shared with everyone here. But as I said before, I want to go through this exercise with you in class so that we can do it together. Notice that I use the same prefix. Get into a habit of using prefixes because it's going to make your use of custom easy language so much easier because everything is going to be grouped together, okay? Let's go ahead and click OK to this. And this opens up my code. All right, now let's go ahead and copy. Actually, we already copied, so it's in the Windows memory. All we need to do right now is paste it. So Control V as in Victor, Control V, pastes the code into my strategy. I'm going to remove a lot of the stuff here because there's a lot of code here that makes no sense for a strategy, okay? All right, I can, let me go ahead and paste it again here, Jeff. There we go. Perfect. So a few things from the very top. Let me get to remove the green text that you see at the very top. Anytime you see green text instead of an easy language document, that is just text, like information text. It doesn't really control the calculations. This is it's just giving me a little bit of information about how to search or what tags to search for. Let me remove that. I don't need that. I do need all these inputs because they are part of the calculation. What I probably don't need is a displace input. Displace is one of those words that allow you to move an indicator forward or backward. For example, a moving average. A lot of times, if you want to project the calculation into the future, you can displace the indicator forward. In a strategy, doesn't really mean anything because a strategy is designed to generate buys and sells. It doesn't plot anything. So I'm going to remove this displace. I don't need color either. And in fact, all these colors over here mean nothing for my strategy because the strategy doesn't paint colors. The colors are only used in an indicator. So I'm going to remove all these inputs that are color related. You know, it starts simplifying my code a little bit. These inputs right here are separated by commas, even though it's not so clear because they're kind of in a column, but you can put it in a one line separated by commas if you want to. Variables, I don't need this in a chart. In a chart is one of those words that checks to see in which application you are in. Are you in a chart or are you in radar screen? We know that strategies can only be put into a chart, so we don't really need this in a chart variables. I'm going to remove this one. I do need the average. I do need the standard deviation, the lower band, upper band, lower band 2, upper band 2. And I don't really need percent %B. Percent %B is an additional calculation that is used inside of radar screen. If you're going to apply this indicator in radar screen, we don't need it for this strategy. As we said before, the green text, we don't need. This is additional explanation. If you do want to, if you do want to make a note to yourself, like a reminder or a little bit of information of what your thought process is, maybe it's useful because a lot of times, and this has happened to me where I write some code and I come back, a few months later and I say, what the heck was I thinking when I wrote this, So a lot of times notes do help you remind yourself of what is it that you were thinking at the time that you wrote an indicator, all right? So don't discount notes just because I'm deleting them here because sometimes they are useful. So we already talked about in a chart, we don't need this syntax because it only works if we're trying to determine which application we need. We do need the variable declaration, this piece right here from row 20 to row 25, this is what's called the variable declaration, where my variables are explained. For example, my AVG means that it's the average of the close for a period of length. My SDV is the function standard deviation, and so on. So each one of the variables is assigned a formula. And this is kind of the structure of the easy language, where every indicator and strategy that is part of the TradeStation platform, you're going to see that it follows the same structure. Now over here we have some plot statements. Now again, in a strategy, we don't really need plot statements, because the strategy only generates buy and sell signals and puts those signals on the chart. The plots are only used inside of an indicator. So for example, if I go back here to my indicator, this is where I copied from. That's where we need the plots, because that's the command that easy language needs in order to draw a line. Strategy doesn't need that. So let me go back here to the strategy, and I'm going to remove all these plot statements. And here we have, if in a chart, then do this. We're always going to be in a chart, so we don't need, this in a chart syntax. This is just for that other %B calculation that we deleted, a little bit higher. %B is what you see when you put the same indicator into radar screen. Remember that this is an indicator that already exists inside of TradeStation, so there are different purposes or different ways that it displays. For turning this into a strategy, we don't need some of the pieces here like this other plot. So I'm going to remove this here, this chunk, and then look at this code right here. Row 29, before I delete the text, it says color, plot 4 in grid applications if color %B input is true. The note here is telling you that this is just a styling piece of code that sets the color to specific colors based on the value of %B. Do we need it for a strategy? We don't. So what is it that we're going to do? We're going to select all this chunk of text that is color related and delete it as well. And our code starts looking simpler and simpler. What I do want though, or what I do want to look at, is the alert criteria. Remember that when you have an indicator, and this is true for most of the indicators on the TradeStation platform, they all have alert criteria already programmed into the indicator. So I'll give you an example. Moving averages are programmed to generate an alert when the closing price crosses over or crosses above that line, something that is built in. The Bollinger Band has built-in alert criteria. Where the close crosses over the lower band, then you have an alert. So that alerting is a signal. And most of the time, I use that signal information to create my order commands. And that's what we're going to do here. But we don't do it in the form of an alert. So we don't really check alerts for strategies. The strategies automatically generate buys and sells based on the criteria. So what I'm going to do is remove this alert piece because we don't need it. But I am going to look at the if-then statement. If the test price L band. Now this test price L band sounds confusing, but remember that is always an input. See, test price, upper band and lower band, they're all set to the closing price. This just gives you flexibility to use other prices inside of the candlestick if you're interested. Most of the time, all these calculations are based on the closing price. And as you can see, all these inputs refer to the closing price. Of course, if you wanted to simplify this, you could remove all that. And then instead of using this word that says test price L band, you can just straight use the word close and simplify it. But I'm going to leave it the way it is. If test price L band crosses over lower band, I do not want to alert, because alerts don't work the way that they do in indicators on strategies. But if this happens, if I'm crossing over the lower band, I'm going to buy next bar at market and use a semicolon at the very end. I'm not sure how familiar you guys are with easy language, but every time that you type in a sentence or an expression, you have to end that with a semicolon so that you can tell easy language, this is the end of this sentence. I'm going to go on to another one so that doesn't try to mix all those lines together. Notice how simple the command is, though. Buy next bar at market. A lot of questions. One important question that comes up all the time is, why next bar and not right away? The reason for that is because strategies are calculated on the close of each bar. So the bar is, updating tick by tick. When the bar closes, that is the time that the strategy runs the code and see if the criteria is met. So on that closing price, if the conditions are met, it's going to generate an order for the next bar. Why the next bar? Because the bar that it was generated on, or the bar that is used for the calculation, is already closed. There's no more trades on that bar. So the only possible tick on which you can trade is the next one, which is the next bar. That's why, order syntax is like that. Buy next bar at market. But a market order would be a type of order that just goes to the market and tries to fill you as soon as possible on whatever price the market's trading at. So in a strategy backtest, that would be the opening price of the next bar. All right, that's one side of my strategy. I'm going to do the other one, or the other side. So let me go ahead and do if test price crosses under upper band. What are we going to do? I'm going to sell short next bar at market. When you type in these words, make sure that they come up in blue, the ones that are supposed to be blue. Otherwise, easy language is not going to recognize them. For example, if you do selling short instead of sell short, it makes sense to you, but it doesn't make sense to easy language because it's a totally different word. And notice that the word comes up in black, so it doesn't recognize it. As soon as the word turns blue, it's because it's a reserved word. It exists in the language and you can use it. So instead of selling short, I know that it's sell short, and notice that it comes up in blue. By the way, you can do sell short as one word or sell short as two words. Easy language just means the same. Let me remove this at the bottom. Let me remove this copyright. And there we go. We simplified the strategy. We're going to turn this into a little bit more variation of the strategy, but let's go ahead and verify it first and see if it's working. I'm going to click on verify, which is this green checkbox at the very top of my toolbar. I click it and the strategy is verified. I have 0 errors, 0 warnings, and I'm going to put this custom strategy into my TradeStation. All right, studies, add strategy. And the name of this strategy, we said that is @MC Bollinger dual bands scale out 2. Remember, this is the one that I named 2 because the one that is here is already in that zip folder that I shared with you. Okay, so I'm going to put the strategy on the screen. And here we go. This is on Amazon. This is going back 6 months. Okay, we can see that every single instance where the strategy meets the criteria, we have an entry. We still don't have any exits, but this is a strategy that flips you back and forth between a long and a short trade. You're always in the market. But we can see that when the price activity goes above the upper band and it comes back inside, we have a short entry. When the opposite happens, when it goes to the bottom side or below the lower band and it goes inside again, then we have a long entry. And every time that happens, then we get an entry. It doesn't happen consecutively. So once it's in a trade, it's not going to take you into another trade until something different happens. Let me show you what I mean by that. Like over here, we penetrated the upper band, we came back inside, we have a short entry. But that condition happened again multiple times after that, but it's only one single trade because that's how the strategy is set up. It only takes one trade in one direction at a time. Let's go ahead and refine our strategy a little bit more because I want to do this scale out part and show you how you can write those little components into your code. Because the idea here is that I want to take a trade, but I want to use the other bands, you know, the one standard deviation line. I want to use the average line and the negative one standard deviation line as ways of exiting my position. That's why it's called scale out. So I establish a position, and as the market moves in my favor and it crosses these different lines, then it's going to scale out of my trade and see how it works. Before I do the changes, let's go ahead and take a look at the strategy performance report and see what type of numbers are we working with. Or for Amazon, you know, this plain strategy is not that bad as we see here, right? A total net profit of, you know, almost $5,000 in 6 months. You can see the date range up here, February 20th to August 20th, 2024. The profit factor is 3 points, which is pretty good. For every dollar that we lose, we make $3. I mean, that's a ratio that any trader would be happy with. Again, this is a historical backtest. Do not trust the results and think that this is going to happen exactly the same way going forward, because it's not. But it's interesting that we can have this raw idea, turn it into a strategy, and see how it works. Let me go ahead and start making some modifications to my code. A few things that I can do by trade size. Now, I can use a word like trade size because what I want to do is have the ability to control how many shares are being entered and exited. There's always a default, by the way. If you don't specify how many shares to or how many contracts, because this is a strategy that can also be used in futures and options. If you don't specify the number, the strategy will just use the defaults, which if you're trading shares, it will be 100. But if you want to control the size of your position within the strategy, you can use words to control that. Now, I'm using the word trade size, which means nothing in easy language. And I did that intentionally because I wanted you to see that it turns black. Black are words that you can make up and you can tell easy language what they mean. How do I tell easy language what trade size mean? I'm going to do it here at the inputs. So I'm going to add an additional input up here that is called trade size, and I'm going to initialize this to 1,000. I'm going to trade 1,000 shares of any security that I put into, or any security where I apply this strategy. Okay, 1,000. So now instead of buying 100, it should buy 1,000. Now let me, before I make the change, show you. See, the negative 100 and the positive 100 are the default sizes. If I go back here and I say the same thing here for my sell short trade size, then I'm going to verify this. Of course, it says strategy. Let's see. Maybe the trade size is the location. Maybe trade size cannot be there. It has to be next bar, by next bar, trade size. No, it shouldn't be. Then, okay, let me just see something here. These are the type of things that, you know, happen. Let's see. And we have to figure out why. Let's see. Next bar can only be applied to open date and time. Test price plus over then. Buy trade size next bar at market. This is a strategy. Oh, okay. Thank you, Sebastian. Of course, I forgot the word shares. Thank you for that. And if I verify again, then that was the problem. Thank you for that. You know, sometimes I'm looking at code and say, what's wrong with it? You know, it's supposed to be verified. I'm not sure if it happens to you guys too, but sometimes you don't see what is so obvious. I forgot to say the word shares because it has a number. Trade size is just an input that houses a number, but it doesn't know 1,001. I could say 1,000 pigs for what it cares, you know. So I have to specify what is it that you wanted to buy 1,000 of. It's 1,000 shares. And you can use contracts if you're testing this on futures. So let's verify this. Oh, I verified it already. When I go back to TradeStation, then you can see how the quantity is updated to 1,000 for my longs and my shorts. Let's go back here to my code and enter a few lines of code that are going to take care of my scaling out. So if market position equals 1. Market position, as you can tell, it's a reserved word, and it tells the strategy if you're long, short, or flat. If I right-click on market position and I click on definition, by the way, most of these words have documentation, the blue ones, because those are built into the language, and you can right-click on them and go to help. And you can see that market position is a reserved word, and it returns a value of 0 if the current position is flat, -1 for a short position, and 1 for a long position. When in doubt, go to the help. It's going to be very useful for you to understand some of the words that are inside the code, right? So if market position equals 1, then begin. Because I mean, if you're in a long trade or a short trade, the order actions are going to be a little bit different. Okay, so let's go ahead and do something here. I'm going to use a factor to multiply trade size. I see your comment in the chat about show trade size 20% of account value. That is something that you can do inside of easy language. So you can tap into your account balances and calculate, a percentage of your net worth or your available cash. So whatever those values are at any given moment. For now, we're going to assume that there's enough money in my account, which there is. I'm using a simulator that has a few $1 million. Very, very similar to my personal account. So I know that the strategy can do that. In fact, even if you don't have any money in your account, the strategy doesn't look at your account unless you tell it to. So the strategy will always assume that you have enough money in your account to trade whatever you're telling it to trade. So if I'm in a long trade, I want to, if close, we're going to straight on use the closing price. If close crosses, if I'm in a long trade, I'm at the bottom of the Bollinger Band. Remember that the security has to be oversold, and it has to be turning up and crossing the lower band in order for me to be in a long trade. So if it continues to go up in my favor and close crosses over, I'm on the lower side, but I'm going to do lower band 2. Remember, the lower band is the original one. Lower band 2 is the inner band, which I set to 1 standard deviation. If it crosses that inner band on the lower side, I'm going to exit 1/4 of my position. So if close crosses over lower band, then sell next bar. Let's do the trade size. Trade size times 25 next bar at market. We're going to stick to market orders just to make it simple, but notice that I'm multiplying the trade size times 0.25, meaning that the 1,000 would turn into a 250 share exit. Okay, let's do the other one. If close crosses over AVG. AVG is an midline. Then we're going to do another one. Sell trade size times 1/4 next bar at market. I'm forgetting the shares, right? Trade size shares. I'm going to have the same issue if I don't write the word shares in here. All right, and then do the third line. If the close crosses over, in this case, we're turning into the upper side, but we're still inside, the original bands at 2 standard deviations. So I'm going to use the upper band 2, then, and this says sell trade size times 0.25 shares next bar at market. So this is my idea of scaling out of the trade. And then I'm just going to end this whole block and see if it makes sense. If it makes sense to easy language, because that's the ultimate test. I'm going to click on verify up here. And it seems to like my code. It didn't generate any errors. I'm looking here at the bottom, and it says 0 errors, and it says verified. So it seems like it didn't. At least, I followed some of the guidelines of easy language. So let's go ahead and see on the long side if it works. Before I spend time, writing it out for the short side, I want to make sure that the syntax is working as it should. Let me go back here to my TradeStation. And here we have a very clear trade of that happening. Let me zoom in so we can take a look. So you can see the condition here for the original or the entry trade. You see the bands crossing below this extreme. As soon as it enters inside, we go long. The price kind of went sideways, but as soon as it crossed over the inner line, this is the lower band, the one that we added as at a 1 standard deviation, then it sold. Notice that it sold 250 shares because our trade size or our position size at this moment is 750. The price kind of went in the opposite direction and then started rallying. And you can see that right here, it crossed the midline and it sold another 250. And then it crossed the other upper line and then it sold another 250. It wasn't until the strategy went short that it exited the remaining. I mean, we can use the other line to sell the remaining 250 if we wanted to. I guess it would have sold it somewhere, I think, over here. Let's go ahead and try that. Let me go back here and do the very last remaining 250 shares. If the close crosses over, this would be upper band, then sell trade size times 0.25 shares next bar at market. We verify this and we go back to TradeStation, and you can see that even before we turn short, we can see that we sold right here the remaining 250, and our market position at this point is 0 shares. So it does scale your position out as it crosses all the different lines inside of the Bollinger Band. Okay, so now let's go ahead and do the short side. The short side it's simpler because I can use a lot of copy and paste. Let me show you what I'll do. I'll just copy this whole thing. I just have to be very careful that I change the direction of the trade and be careful about that. Let's go ahead and paste this piece of code. But this time I'm looking for a market position to be -1. -1, I'm in a short trade, meaning I'm starting at the very top of the Bollinger Band. So now the close has to cross under, not over, it has to cross under. And this, instead of lower, is going to be upper. Crosses under upper band 2, then, and this is not a sell transaction, this is buy. It can be one word, buy to cover. It's a short transaction, so it's a buy to cover. But everything else is exactly the same. So again, this other is under. So we are in the average. And we copy here and replace here. And this is under. And this is not upper, this would be lower. Just make sure that you change the band so that there's no confusion. And here would be buy to cover one more time. And the last one, if the close crosses under, instead of upper band is lower band, then buy the cover. Okay, any questions? So let's go ahead and verify this. And that's it. Let's go ahead and back to TradeStation and see if it's doing what we want it to do. Of course, many times it's not going to be, good trades, which it doesn't really matter. Well, it does matter because what you want is winning trades. But the idea here is to show you how you can take an idea and turn it into a strategy without a lot of, programming. This is a simple idea, straightforward, and we're introducing some concepts that you can use in strategy writing. Let me look for a decent trade for us to analyze. Sometimes something that it's nice looking, right? Something that is a winning trade. Well, maybe not. Let's look at this one. Seems like a major losing trade. So right here, the prices went to the upper side, so we were at an extreme. The market decided to come inside the channel. So what did the strategy do? It shorted 1,000 shares of Amazon. From the moment that it shorted those 1,000 shares, look how the price went in the opposite direction. So maybe one of the things that we need to do to this strategy is use some sort of a stop, right? Or a trailing stop, something to prevent this from happening. Because if the market is going in the opposite direction by so much, maybe I don't want to stay on that trade anymore or that long, right? So here, notice that the price went all the way up, and it wasn't until, let's see, where's the 750? Oh, right here. So when it went short, a few bars later, we crossed, the dotted line, and it sold 250. But then it shut up. Look at where the prices went. And it wasn't until it crossed the midline up here that it exited the next 250. How do we set a stop here on our strategy? Well, let's do a stop here. Maybe a stop is very simply done by set stop loss. That's a reserved word of easy language, and we can just specify the amount that we are okay losing. Let's say that if we have a position that's 1,000 shares, let's go ahead and set this. Let's start with $1,000 and see what happens. I'm going to verify, and let's go back here to my TradeStation. Yeah, maybe 1,000, maybe for this strategy, Amazon, which is priced at $186, and I'm looking at a 60-minute chart, maybe 1,000 was a little too tight, because you can see that when we entered the market on the trade that we were just analyzing, it actually exited on the same bar. So the $1,000, it's a little bit too tight for this particular strategy. If you're trading $1,000, if you're trading 1,000 shares of Amazon, we're talking about a trade that's $186,000. So maybe $1,000 stop, what was very, very tight, very minimal for this size of a trade. If I want to go back in here and go back to the code, we can set this to 5,000. We can set it to any amount. In fact, we can set it as an input, and I can say stop amount. If I do a word inside of parentheses, I do have to make it an input up here. So in addition to the trade size, add a comma, and I'm going to do stop amount, and I'm going to start this at 5,000. Verify. Go back here to my chart, and then you can see that, that trade that we were looking at, we saw that we went short. It exited, the first 250 that we saw that it did back in when we were looking at it without the modification. And then you can see that we got stopped here. This is our stop loss. So it exited everything. It shorted again, though. So yeah, that strategy is consistent. The changes like this, you have to then think it through and say, oh, what happened here? It stopped me, but at the same time, it went short again on a trade that is a losing trade. So those are the things, or the mechanics that you have to look into and decide, okay, what is it that I need to do this strategy to make this work? Let's go to the strategy performance report quickly before we end the class. Okay, you can see the results here. They're not as good as they were when we were doing just the plain Bollinger Band criteria. but it's a great exercise. Now the total net profit, we do have more money, but the performance is not as good. You know, the profit factor is 1.2. I'm not sure if you guys remember, we had a 3 in there. And if you go to the performance graph, you know, this is very telling. You can see how the strategy at the very beginning did very well. You can see that we were hitting new equity peaks, but then all of a sudden the strategy goes crazy and my equity goes, you know, up and down like an EKG. So not a good performance. You know, you want to have consistent results and not have these periods where anybody would have just given up on the strategy. But at the beginning, it was really good, if I may say so. All right. So again, those are the tools. That's how you turn an indicator into a strategy. Hopefully, you know, it's not overwhelming. I know some of you, I recognize some of the names here, and I know that some of you have used Easy Language and have used the platform for a long time. So this may be a little bit more like a refresher. But if you're new to TradeStation and this feels a little bit overwhelming, just remember that the more you use it, the more familiar you'll feel with it, and the easier it'll get. And I know that you can create indicators that are to your liking and to your own trading style. Let's see. William says this is being recorded and it's going to go through editing and compliance, and we're going to post the recording maybe in 2 or 3 days. So check the TradeStation YouTube channel. We post all our videos in there. Are there courses or tutorials about coding variations for these type of purposes? Inside of the TradeStation platform, if you go to apps, you're going to find one app that's called Video Station. Video Station is a TradeStation app that feeds from YouTube. So the videos that you find in YouTube are also uploaded here. And if you go to the masterclass category, which is the type of class we're doing right now, you're going to have a subcategory here for leveraging Easy Language. So you find most of the classes that we do on customizing Easy Language, and maybe find a topic that you find interesting. Jeff is asking, how can we learn to adapt this information to other indicators we use? Do you use an Easy Language class for that as well? Sure. The same way that we did it with Bollinger Bands, you can apply the same concept to any other indicator you use. Hopefully, Jeff, you have access to the code, because a lot of times, yeah, you may have access to an indicator that you probably purchased from a third party, and they usually protect the code and you don't have access to it. But if you do have access to the Easy Language, then it's just a matter of looking at what the calculations are. If there are any alert settings, it's very telling, you know, what the indicator is looking for. Like the example we used at the very beginning, where we said, if you're looking at a moving average, you know that the signal is when the closing price crosses over or under that line. Most indicators will have that type of syntax, and we use that criteria as your entry and exit signal. William is asking, do you still have a list of professional coders to help someone? We used to have a directory of Easy Language developers, but we don't anymore. So if you do find one, you know, out there, they're not, you know, sponsored by TradeStation. So, but I'm sure they're, you know, posted somewhere. We just stopped having that directory on the TradeStation.com website. Jeff, to find out if you have access to the code, just try to open the indicator inside the development environment. For example, here, I just opened up Easy Language. Easy Language is one of the apps. It opens up the development environment, which is what we were working on. And then just go to File, Open. And File Open will open a dialog with all the indicators and strategies that are in TradeStation. And just find it. If it's an indicator, you can filter by indicator, find the name, and open it. If it opens and you see the code, is because you have access to the code, right? All right, that's the questions for the class today. I want to say thank you for spending this time with me in this masterclass, and I hope to see you in a future class. Check out the events calendar. We have some great options, equity options classes coming up, and I wouldn't want anybody to miss them. So check our events calendar for topics and all the classes that are upcoming. Thank you for your time. Have a wonderful afternoon, and I'll see you next time. Goodbye.